Thank you everyone for joining today's online workshop. We have, and this workshop has been put together after a couple of members who got in touch with us on every time we were doing Espresso, we were told to give them a contact of someone who would help them make a pitch to raise their funding. So that's where we got the idea from. And we have with us Suparna Dua, who is a founder of Serenity Capital Advisors. And Suparna is an investment banking professional for consumer and technology startups. She provides advisory services to startups and SMEs on business plan development, financial modeling valuations, investor negotiations, and transaction closing leading to capital raise. She is currently working on fundraising transactions in consumer, media, and technology businesses. She is a funding leader member at WICCI's Banking and Credit Council and organized a bootcamp for women entrepreneurs under the Accelerating Women's Entrepreneurs program, which is also called AWE. Suparna, over to you. Thank you so much for being here this evening with us. We really hope our members benefit from today's workshop.
All right. Thank you so much, Shruti and ladies who lead for organizing this. I'm happy to be here today. Good evening, everyone, and welcome to today's session. I feel really happy to be sharing my learnings and experience, of the work that I've done working with founders and businesses over the last 15 years, helping them think through their business plans, helping them fundraise, and I'll be sharing some of those experiences and learnings with you here today. And I hope by the end of the session, if there is even just one idea that you can take back and make your pitch better, I'll be quite happy about that. Quite happy about spending these 60 minutes with you all. So at the outset, let me start by sharing that there are certain principles and expectations that investors have in what they're looking for in a startup. And if we keep those parameters in mind and the information that they're looking for, and we put together a deck which is well thought through, it'll be very we'll be able to communicate our ideas very effectively and clearly to the investors, and kind of get their confidence to invite us for the next meeting. And that's the whole idea of this of the pitch deck that we put together. Let me first share my screen here. I hope it's visible to everyone. All right. So these are the contents that we will be covering today. We'll start by looking at an overview of just the VC investments landscape. What do investors want to see? So the important parameters that are relevant for when they're making an investment. 11-slide investor pitch. So really what a pitch deck should constitute. There are these 11 kind of elements that we need to think through and put together when we're presenting it to an investor, and some brief rules on the elevator pitches. So starting with first looking at what is the VC investments landscape globally. If you just look at this graph that that's on the screen here, in 2021, we did about 690 billion investments were made by a venture capitalist, over $366 billion, which was made in 2020. So that was a 1.9x increase that we've seen. And if you look at India, we did about $38.5 of investments which went into startups in India. And this was a 3.8x over the $10 billion that were invested in 2020. So that's a huge jump from 10 billion to 38 billion. Clearly, there is an acceleration in India of the number of startups, in the number of deals that are getting invested in. And also, if you notice, the last year has been great in terms of exits as well. We had exits north of 14 billion and, the highest ever number. And it was a maturity that startup ecosystem reached in the last 1 year with the IPOs that we had, the number of IPOs that we had. So in 2021, it's interesting to know there were 44 unicorns, of which now, of course, now it's 100. We're reading the reports that 100 unicorns are startups that have become unicorns in India. But out of the 44, only 4 had women, founders, and only one of them was led solely by women, which was Naika. I'm sure you all have, heard about her, read about her, the unparalleled success that they had with the IPO. So clearly there is, scope, and there's a huge opportunity out here, and there's a lot of capital available. The venture funds, the number of venture capitals have also gone up from say 560 VCs to about over 600 venture capitalists. So there's a lot of funding that's available to be deployed, and all we need to do is present our business model in a way that convinces the investors to invest in us. Let's look at what do investors want to see, what's relevant for them. And there are 5 key parameters. The first one is market attractiveness. So what is the size of the market? Who are the target customers? What is the potential for the growth? And for every founder, entrepreneur starting a business, this is a very key element. And a lot of times I've seen that this gets missed out. We're not able to pinpoint the market size. And there are various ways to do that. We could look at a top-down approach or a bottom-up approach, where we're looking at the build-up model. And why this is very important for any investor to assess, and even founder to kind of have a hold of, is because the market really decides the potential and the scale that the startup can get to. So if we're looking at a very nascent market size, there's only so much potential of growth that the startup will have. And typically a venture fund investor is looking for a market leader. They're looking for someone who can grow in a 3 to 5 year span to say 100 crore revenue, because they need to turn around their investment from to about 10x in about 3 to 5 year time span. So therefore they're looking for differentiated business models and businesses that can scale very fast, higher than an industry growth pattern, and therefore they look for unique businesses. So market attractiveness is important from that perspective. The second one is product differentiation, which is the uniqueness and the value proposition of the business. If there are any patents that the business has, which kind of set it apart and give it advantage over other players, is there a technical edge? Is the business very profitable? Is it commanding very high profit margins, higher than industry benchmarks? The third parameter is team's managerial capabilities. What is the skills and the background of the founders? Do they have the skills to execute? I mean, it's great to have an idea, but one needs to have execution capabilities as well. So skills in marketing, management, finance, are very relevant here. And of course, references. It's always good to provide good references to an investor. It gives them more confidence in us having to execute the business plan. The fourth one is environment and technology life cycle. So, every startup, every business is impacted by the environment around us. And we, should be able to assess, is there something that is a barrier to entry for others? Is there something that we can use to our advantage in terms of, robustness that our business cycles have? Is there a downside risk protection? So typically, a generic business like a steel or a cement will have a larger, life cycle, a technology life cycle. Business in the tech space will have a limited life cycle because there's constant innovation happening in this space. So we need to be aware, what are the barriers to entry? What is the robustness of the business cycle? And the last one is the exit potential. And that's very relevant to any investor, of course, because they are investing for a limited time in us and they want to be able to turn around their investment and to be able to assess if there is a possibility of either a secondary fundraise or a merger or an acquisition by a larger strategic player or even an IPO. Sorry. So these are the parameters that we need, that investors want to see when they're evaluating a business and a startup to invest in, and it'll help to kind of weave this into our business plan when we're presenting to an investor. So yes, now we come to the investor deck and what that should constitute, what that should look like. I've kind of put together 11 slides, and which will talk about all the relevant things that are important from an investor standpoint, to be able to explain clearly our business plan, our strategy for growth, our business model, and how we plan to execute the startup, the business idea that we have. The first slide is the elevator pitch slide. Now, this slide, is really the first slide that we put together, talking about what our company does, and to describe our business model in simple, 1 or 2 lines or a simple paragraph. What is the business model? What are the products and services that we're looking at? And what is our vision for growth? And if there's a problem to be solved, what are the problems that we are solving? What is our solution to it? For example, we can say we're the Amazon for the youth, or we're the Amazon for event spaces, or the Airbnb for event spaces. So essentially what we're trying to say is that, we are the marketplace for any product that you want to sell to the youth of India and the world. And the problem that we're solving is that there is no dedicated, platform that is focused on the youth. And that's the problem we're solving. And we're similar to a first cry for babies in that sense. So the elevator pitch has to bring out our business model very clearly, and the vision and solution for our customers. The second slide is on the market opportunity, and we talked about that earlier, when this is a key parameter when we're looking at, when the investors look at investing in a startup. And here, typically we need to talk about what is the market that we are addressing, what is our target market, who is our target customer that we're going to be selling our products to, and what is the total addressable market for us, and the subsector, if we can possibly talk about that. Also define our client. What are the key characteristics or demographics? Are we selling to the customers directly? Is it an online segment? Is it an offline segment? Is it a B2B? Are we selling to corporates? So who is our ideal client? And if there are any important market evolutions or trends, then we should talk about that. For example, monetization was it helped a lot of businesses go digital. A lot of even the payments business, the fintech sector, which saw so many investments in the last couple of years, was due to monetization. And because they were businesses like Paytm, that kind of gave us the opportunity to easily transact online, and that really kind of triggered the whole payments ecosystem, where even the banks could not catch up, large banks. So when we're looking at market, there are 2 ways to assess it. We could do a top-down or a bottom-up build-up model. In the top-down model, essentially we'll look at the total market size of that sector. So if we're looking at say groceries, retailing groceries, the total market size is around $200 billion, and that's really the total addressable market. But when we're looking at a startup, we need to define what exactly and who exactly are we going to target in terms of acquiring customers. And we can also corroborate this 160 billion. Of course, the 200 billion is larger market, but the bottom up build up model, I can share an example on how we should think of assessing the market size. And of course, every business is unique, and every market is different, and there is a way to It really depends on how you're acquiring your customers and how you assess the market size. Just to give you a small example on the bottom-up approach, if we're looking at the grocery market, retailing online, and I'm taking an example of a startup that I looked at way back. This was Big Basket, and they were looking at raising funds, and so while the addressable market, like I mentioned, was huge, their key addressable segments, customer segments, was really the apartment complexes and the densely populated areas, which were for which convenience and time was more critical than ordering from their retail stores or the corner stores. And that's the market that these guys were addressing. And when they did a calculation, they looked at, okay, how many households are there across India that will be interested in buying online, and for which convenience is relevant, and variety of products is important. They looked at two parameters. One was the affluent and the time-starved families, age range of 44 to 54 years, having an annual income of about 10 lakhs to 15 lakhs. And they were about 5,69,000 households across India, and 2,90,000 in the top 5 cities. So the average household spend for these families were about 12,000. And therefore the market size came up to 1.65 billion. And similarly, family with young children was about 1,85,000 in the top 5 cities, about 7,500 rupees spent, adding up to a market size of 0.65 billion. So together, their direct addressable market was about $2.23 billion, which was a considerable size of a market, convincing an investor that this is the market that we can immediately start with. And so that's how you can, put together, your statistics, looking at what your business is focusing on, what is the customer segment, what is the industry. If anybody has any questions, I'm happy to, if you want to interrupt in the middle, I'm happy to take your questions. And, it'll be great to make this more interactive. So please feel free to ask your questions. Is my slide visible? I'm just, checking because I don't hear anyone.
No, it's all visible, Suparna.
All right. Okay, great. So yeah, moving on. In the next slide, we need to talk about what is the problem that we're solving. Why is the market in pain? And here we need to describe the problem that is being solved. What are the current solutions in the ecosystem, and the gap that is unaddressed? As I mentioned, investors are looking to invest in unique businesses. They will not be the generic businesses which have a linear, growth pattern. They will look for businesses that can scale up very, very fast and have a high growth potential. And therefore, they're looking for, differentiated, innovative businesses. And, we've seen in the last few years, a lot of investment has gone into the consumer space, the tech space, because those are the markets that are growing. So when we're looking at, putting together our deck, it's important that we define, if we are addressing a gap or not, if we are solving a problem, for our target customer. I talked about, Big Basket. Even Zerodha solved a big problem. Taking Zerodha's example, they were always trading on equity that was prevalent through brokers, sub-brokers, even large banks like ICICI Direct had an online platform to trade. But when Zerodha came in, they kind of made the user experience so superior that they made it easy for anyone to get online and trade. And that was really the problem that they solved. And that kind of made them get the market share that they got. And even the pricing, the pricing was much lower. ICICI Direct, for example, was charging about 0.55%, and Zerodha was made it nil almost. Yeah. The next slide has to focus on, we talked about the problem that we're solving, and the next slide has to talk about, how is our solution 10 times better than the previous solution? How are we different? How are we 10x better? Are we easing, the pain? Is our solution easing the pain of the customer? And we can talk about this taking an example of a current client or a future client. I can give an example of, Ola Cabs, another business that we looked at, we evaluated, we met Bhavesh Agarwal. He explained to us that, what he's trying to solve is basically the fact that we should be able to book a taxi using our phone or using our mobile app. And, traditionally when we were before, of course, Uber and, Ola came, we used to, either call for a taxi or go to a taxi station and, end up spending a lot of time in getting a taxi. And, there was no visibility in terms of, pricing. So their solution really focused on giving you a branded experience and assured quality. The pricing was transparent. It was, of course, convenient because you could book it from your phone, and you could also see the cars on the map and the time it can take. So there was a lot of visibility that the customer had and made it very convenient. And therefore they were able to scale their business, and that was a real problem that they solved, and we all know about that. Another example is Nykaa. The solution that Nykaa wanted to offer to their customers was having all the beauty products available at the click of a button, and authentic products. I mean, when we're shopping online, we don't know about the authenticity, whether it's original, whether it's authentic, whether it's, from the brand. And they made sure that they tied up with all the brands. So they tied up with about 350 brands, and, delivered products at a good price, and, conveniently to the home of the customer, which is, why they had the unparalleled success. And their solution was definitely better than what, typically you have, because there was no dedicated platform for beauty products, and they kind of overhauled the space, in that sense. And they were actually the online Sephora, and that's what they claim to fame is. Another example I can take is Indigo Airlines, which commands about 55% market share. And the reason they do that is because they promise the USP is on time, and that's what they've kind of delivered on, efficiency, on time, and they've ensured that with the number of rotations that they've done, they're able to kind of contain the price and offer that benefit to the customer. And therefore they've been able to get the highest share in terms of market. And 55% is only held by them. The balance is by the other airlines like SpiceJet and AirAsia and multiple Vistara. So they're all good airlines, but of course Indigo has the largest market share because of its pricing and its promise to reach on time. And that's really the USP that these businesses had. So each of them have had a unique way of solving a problem. And when we look at our business, we need to be able to address how we are better, we're cheaper, we're faster, we're better quality. So all of that needs to come into a slide where we're giving out our value proposition. Yeah. So the one slide has to talk about the team. And the team that is going to build this business, what is the background, what is the experience, what are the credentials, and the leadership skills that the team has. What's relevant is, the skills of the team that are relevant to the business, and whether it's selling skills or their tech expertise, we need to be able to bring that out in our deck. And essentially, what we're saying is that we're the best team to, execute this business idea. And if there are any missing, team members, we can always, bring that out as key hires, or even have, them on our advisory board. The next slide has to talk about what is the traction currently. And essentially, what are the milestones that we've achieved? We should be able to present that, in a form of a monthly traction or a quarterly or an annual traction. And, there are some metrics which are relevant, and I'm talking from a, tech and a consumer point of view, where we look at, parameters like consumer acquisition costs, what is our churn rate, who are the, how many monthly unique visitors do we have, what is our conversion rate, what is the lifetime value. And essentially, we want to be able to show a lot of momentum. That's very important, that we're growing month on month and quarter on quarter. And that gives a lot of confidence to the investor that we're executing the idea, and there are testimonials or to prove what we're delivering to the customer. If we have any prototypes, if it's a tech product, it'll help to understand what the prototype is and what has been the proof of concept. If there is a contingent order book, we should bring that up. Any pilots that we've done, what has been their outcome, what has been the feedback of the customers. This slide really should focus on the proof of concept that we are building. The next slide is going to focus on how we're going to acquire our customers. So how are you going to sell it, and how are you going to get leads? So typically we will talk about the target customer segment that we have. What is our acquisition strategy? How are we acquiring the customers? Our business development strategy, whether it's offline, it's feet on street, or it's digital strategy using social media. And it'll help if we have a strategy which is linked to our customers, the direct customer that we're looking to deliver the product or the service to. And I can give you an example of JioSaavn, another client, which was when they were starting out, they wanted to cater to the South Asian community, and they were actually, this app was built in the US, and they were targeting onboarding users in the US, but in effect they actually onboarded users globally, because their user experience was very high quality, and they ended up acquiring about 35 million users before they became JioSaavn. And their focus was to target the youth, the campuses, do offline events. Similarly, even with Big Basket, their first target segment was these dense clusters, the urban clusters, the apartment complexes, and they had a very low cost marketing model, where they did activities within these complexes, used the local media, the radio, and they did the apartment level promotion, which helped them acquire the initial leads that they got. So here it'll help to talk about how we're going to reach our customers and how we're going to acquire our customers. The next slide is going to be on competition. We must scan the ecosystem that we're going to be starting our business in, understand who else is a player, and kind of map the players in the current ecosystem, and talk about how we're different and how can we score over the current players. It'll help if you look at the slide. There is a 2x2 matrix where we are comparing on quality and on price, and we should be able to kind of reflect that we sit here right on the upper right quadrant, and basically talking about the fact that we have an edge over the current players because of our quality, because of our price. It could be because of the depth of our product. So whatever parameters that we think kind of help us set apart and are our differentiators with the current players should be kind of brought out here. We can also use this another matrix, which is like a comparison matrix, where we have the players on the left. If you can see the competitor A, B, listing out all the direct and the indirect competition that we have, and doing a comparison on the list of differentiators. It could be like I said, it could be better price, it could be faster delivery, it could be a better product, It could be a new product, it could be a new market segment that we're targeting for our customers. So anything that we think sets us apart from the existing players. Moving on, this slide, how fast can your business grow, is very important, because we need to have a plan for growth in mind. And what are the key value drivers of growth for our business? Is it a roadmap for product? Is it scale up in the sales team? Is it the number of locations, the digital outreach? So any operating metrics that can reflect the growth linked with our strategy has to be kind of brought out here. It has to be a more longer term plan on how we plan to scale from point A to point B or point C, and kind of map that here in terms of either deepening our product range, increasing our sales team, going into more locations, or any other value drivers of growth that our business has. Yeah, some of the last slides include the financial model. It's important to kind of have a slide which focuses, and we understand that the numbers, of course, are very relevant, and we can link this with a target market. We can have a 5-year plan focusing on our revenue growth in users, in active users. What is our expenses? What is the EBITDA? Typically, the investors look for a 6 to 12x EBITDA with a positive EBITDA in the range of 10 to 40%. And we need to make sure that we're kind of hitting those ballpark numbers our business is hitting, because that's when there will be interest in the scale in the business. So the key metrics that we need to keep in mind in our financial model, we must talk about the revenue. How are we going to make money? How are we going to charge our customers? So what is the average revenue per user? What are the monthly recurring revenues? What is the run rate? These are some of the metrics that we need to keep in mind, even on our tips when we're interacting with the investor. Even the gross margins, what is our profitability? The net profit, of course, revenue less expenses, the user metrics, which we've talked about, and that we have a definite path to profitability. You would appreciate that's been a core kind of focus in the last few years, of the investors. While growth and scale is very relevant, even profitability is quite relevant benchmark. So yeah, this is a 5-year plan, financials, which should be linked to our growth strategy that we need to put together. Yeah, lastly, how much capital do we need to raise now? From my interactions with a lot of businesses, sometimes, the clarity of how much we need to raise is not there, because, either the financial model has not been put together or not been thought through. And for an investor to get convinced about how much money the startup really needs, has to really come from the business plan, the financial plan. And so a lot of depth and thought needs to go into the end use of the funds, whether it's product development, marketing and sales. Is it, the spend on technology? Is it the team? Or is it the working capital? And we need to kind of, have real numbers which are flowing in from our growth strategy to our financial plan, here. And when we're raising, it should not be like the business raises 3 million and we're only asking for 500,000. So we need to arrive at the capital that we need to raise basis our end use and our financial plan. Also here, we want to be able to convey that, this is the growth that we're looking at with this fundraise. So we're looking at raising a Series A round of $3 million. We will, hit, say, 100,000 users contributing about, 50 million of revenue. So that needs to come out very clearly in this. So that brings us to the end of, what's important to put together in an investor pitch deck. The last slide, of course, has to be, has to have the company logo and, contact details, of the founder, and, email and things like that. Some rules for investor pitches. We need to start with, of course, a lot of energy and excitement. The first sentence, the elevator pitch, must grab the listener, highlighting the extent of the problem. We should be able to convey the business model very easily. Avoid any technical words, technical jargon, which the investor may or may not understand, and we have to explain it and establish credibility. So if our startup has done some proof of concept, we should be able to bring that out, and the traction, if limited traction, that the startup has had. Yeah. So that brings us to the end of the document, the pitch document, and of making the perfect pitch for the investors. Some rules that we need to think through. Some investor questions that we can expect from the investor are, on the company questions: what's the history of the company? When did you start operating? Target market size, and questions like why will you fail and why will you succeed? So we need to think through all of these questions, in our conversation once we have, and the goal is that we need to put together a deck that guarantees us the next conversation, the next meeting, and the goal is to get funded at the end. So that brings us to the end of sharing my learnings with you. I hope this was helpful to everyone, and I'm happy to take questions from all of you, ladies.
Hi, Suparna, I have a question. Sorry, I hope there's no protocol and I can just unmute myself and ask a question. Is that okay?
Please go ahead.
It's a very elementary question, so please, pardon me for that. So I'm working on something and I'm at an idea stage and we're going to do a POC. So that's exciting and we're doing that. And I was just in the process trying to call people and get information on some technical stuff and I wanted. And the other person on the phone straight away asked me, are you raising funds? Do you need funding? And I was like, I'm just at POC. I will come to that. My question is, you have an idea, you're very optimistic about a POC. Is that when you start doing your number maths, that how much money do I need to get this to the execution stage and see what scale I will go to? Or, have I got this wrong? That's my question.
So that's a very good question. While there are certain businesses that do get invested at the idea stage, if the idea is really a breakthrough idea, they can get funding. But I think you need to think through the business plan very clearly, even at the proof of concept stage, when you're getting validation of your business, of your startup. Even then, there has to be some plan that you can put together and get some kind of numbers, and using the build-up method, if it's possible to kind of have some kind of assessment or a strategy or a growth plan in place, it would always help. Like I said, it's ideas do get funded, and startup ideas at a very, very early stage, if the team is very solid. I think the team here is very, very important. If there is the investors convinced, of course, one of the idea, and of course of the execution capabilities, and of there being a market for this business, it's possible.
Thank you for that, Suparna.
Yeah.
Suparna, we have a member asking us if you'll be able to share this deck with us.
Sure, I'll be happy to share it.
I'll share it with everyone then.
Yeah.
Thank you.
Please. Sure, this is for everyone's benefit, and I'll be happy to share this information if it helps.
Thank you. Anyone else? Anyone else has any questions? This would be a great opportunity to ask Suparna and clarify any doubts.
I have one more question in case no one's asking. Sorry.
Go ahead.
Little excited about my idea, and I think this session is at the right time. Just so again, a very elementary and a novice question, I feel, but ideas do sell by the dime by the dozen, and all of that. But if you have conviction in your idea, I'm being told that you shouldn't. There's a way that there's a large part of it that you should not be communicating to people, because today with money, I suppose there'll be many who can build on it and do it. So to what extent do you keep it guarded? Like I said, it's a very novice question, but something that just came to my mind.
Yeah. No, I think it's a fair question. Many times you don't want to share what you're building because it's always the first mover advantage that some of the startups will have, and if it's something very unique idea, you don't want to. But I think a lot depends on how one executes as well. I've mentioned this before. Before Facebook, there was Orkut, if all of you are aware, and even before Amazon, there were many online marketplaces. But I think what's important is how you execute your idea. It's not there were always taxis before Ola cabs and Uber came into place, but the user experience and the execution and the value that they deliver to the customer was more relevant than just the idea. So I think that's really the differentiator: your product experience, and the execution capabilities, and your strategy of scaling up your business is going to be unique to you.
Understood. Thank you.
Yeah, you're welcome. So anyone else? You can feel free to reach out to me. My contact details are with Shruti and with ladies who lead. So happy to help anyone, even if after the session. Of course, I will share the deck with everybody. And but if there's any questions that you think of that you can come back with, happy to talk to you guys, talk to all of you and advise. Shruti. So that brings us, I guess.
I don't think we have any questions as such. The audience seems to be silent.
Yes.
I'm just going to. Yes, the recording of this as well as the deck will be shared on the groups. So please bear with us till tomorrow and I will have this done.
All right. Thank you so much, everyone. It was, great to.
Okay, it seems like we've.
Everyone.
Thank you, Suparna. This was a great session. Thank you.
Thank you. Happy pitching, everyone. And please come back if any questions are there. Thank you.
Thank you so much. Thank you so much, Suparna, and thank you everyone for joining us today. I hope everyone's really will benefit from Suparna's workshop. Have a good evening, everyone. Bye-bye.
Thank you. Bye-bye.